I'm Mi Ji-won, who maintains the standard of United States stock investment at the University of United States Stock Investment. April 3rd, let's start today's United States stock news. Welcome to Mi Ji-won, who is consistently maintaining the standard of United States stock investment. It's been 3.5 years since I started dedicating myself to Mi Ji-won after putting down my title as a hotelier. And to be honest, I don't often think about the past. Even now, I am incredibly busy running the Mijeon YouTube channel and managing the Mijeon online members every day. So instead of thinking about the past, I'm busy every day thinking about how to live in the future, how to proceed with investments, and how to operate the Mijeon YouTube channel or the all-in-one membership to show a slightly more advanced appearance. But there's a time when I keep thinking about the old days when I used to travel to hotels once a year. When is that, you ask? It's my birthday, and today is the day I turned 52, and the reason why I often think about the old days when it's my birthday is, that's because when we had a total gathering at the hotel, there were a lot of team members, and at the last job I worked at, there were over 200 team members. So I received congratulations from a lot of people, and the hoteliers make a big deal out of celebrating birthdays. After all, there's a certain specialty there. Because it's a specialized field, the general manager also makes a very impressive cake. And I remember having a great day with the staff doing impromptu performances and such. So because of those memories, every time my birthday comes around, I feel a bit melancholy, thinking that I don't have many people around me, and it makes me a bit depressed. When this happens, I gain a little strength thinking about the Midas readers who are with me. And recently, the over 3,000 people who have joined the member club. I think it's not bad to spend a day reminiscing about the old days. Well, then let's start today's big tuition news, which I'm sending out on April 3rd, my birthday. Before we proceed with the broadcast in earnest today, there is one important announcement that I would like to convey to you all first. In the MyZone All-in-One membership that I operate, a variety of content is prepared, among which there is a popular corner called MyZone Artificial Intelligence News. MyZone Artificial Intelligence News is a content that many of you often access. In the MyZone broadcast, I have an artificial intelligence that mimics my voice and reads the content in order, which I call Artificial Intelligence News, and it's a very popular program. But in this series, there have been times when I was excluded from the MyZone Artificial Intelligence team members for a while. There was a reason for that. Why? Because MyZone Artificial Intelligence News, in a way, is content where artificial intelligence reads the same content. What does this mean? In MyZone's online membership, there is a series called Omizu. What this means is that when any news related to United States stocks comes up, I provide a very quickly translated Korean version in text. And then, the content translated into text is provided again by an artificial intelligence that mimics the voice of MyZone Max. This is MyZone Artificial Intelligence News. That's how you should see it. So some people found this news a bit burdensome because the same content is provided, but it's just that this text has been converted into voice. So there were members who expressed great discomfort about receiving the alarm twice. So we had no choice but to exclude the artificial intelligence news from the all-in-one membership for the time being, and for those who prefer content in voice, we have created a separate membership and are selling it. Well, recently I delivered a very important piece of news. With the update of the trending feature, I have now completed an upgrade that allows you to set alerts for various content series that I provide. That story. Among the members of the team, each person's ranking is a bit different now. However, members can now conveniently set alerts for only the content they really want to see. This convenient feature has been completed. You can see it like this. So now, from my perspective, it's possible to set alerts for each series because of this. Therefore, the opportunity to add artificial intelligence news back to the Alienware membership has been created. Until now, the artificial intelligence news was sold as a separate membership, and the price was 27,500 won. Starting today, the membership has been discontinued and the content is now provided free to all-in-one members, which seems beneficial. Well, and another thing, there are people who have joined the existing artificial intelligence news membership. What about these people? The full refund for the remaining period is expected to be automatically processed within this week. In case of a refund, there is no need to make a separate request. It is expected to take about 2 to 5 days, so it would be good if you could wait a little. Well, I'm working to continue improving the quality of our existing all-in-one membership, so please bear with us. If any of you have not yet joined the existing all-in-one membership, it would be good to consider joining at least once. Well then, let's proceed with the prepared content for today as planned. Let's start by organizing the situation of the United States stock market. First, if you look at the S&P 500 map, yesterday a considerably good atmosphere was created. As you can see, the number of rising stocks is overwhelming the number of falling stocks, showing a trend of pressure every month. Most of the highlighted parts are very bright. The story suggests the market was very bullish, with many stocks rising rapidly, which can be seen as highly positive. However, this positive atmosphere didn't last long. Why? If you look at the market movements after the close, the S&P 500 has almost dropped by 3%, and in the case of Nasdaq, it has plummeted by 309%. So you can see that the atmosphere suddenly became very tense. The distribution index is also at its highest level. The figure suddenly spiked, reaching 25.5 days. It's almost a panic atmosphere, and in the market, the panic is emerging and creating the same atmosphere as the average target. In recent cases like Tesla, where the atmosphere has reversed, there is a high possibility that Musk's rumors will fly in the market yesterday. He won't do government work anymore. Such rumor-like articles have been reported. With that, the stock price surged over 53%. However, it's currently down 3.67%, and B2 rose 4.66% yesterday, but it's now showing a rapid decline of 7.7% from the current trading time. Celestica is performing poorly, falling 6.41% in the market despite a 4 to 16% rise yesterday. 4% during yesterday's market, but is now showing a 5.31% downward trend in the current trading session. 3.55%, but is currently down 6.47%, 3.51%, but is now down 5.46% in current trading. Palantir is down 3.87% outside trading hours, while Credo plummets 7.62% during the current trading session. In addition, 4.25% in the current trading time, 3.65%, and Amazon is showing a rapid decline of 4.99%. Taiwan Semiconductor is also down 3.97%, and Nvidia is down 3.21% in the current trading time. And in the case of Meta, it fell 0.35% yesterday, but it is showing an additional decline of 2.95% in the current trading time. The reason why the market is suddenly showing a panic is, as many of you may know, the Federal Reserve's announcement was made yesterday, and the content was much more pessimistic than expected. So in today's broadcast, we will focus on what content was included in Trump's tariff announcement and proceed with the broadcast. Well, first of all, the Trump tariff announced yesterday is extremely complex. So, to facilitate your understanding, we will try to summarize by focusing on the most important highlights. There was an announcement that a minimum of 10% basic tariff will be imposed on all products exported to the United States. So far, it's not bad. Why? Because market experts had predicted that a basic tariff of about 15% would not be imposed. Well, secondly, after imposing a minimum of 10% tariff on all countries exporting to the United States, and then additionally, there was an announcement of imposing additional tariffs on the 60 largest non-tariff countries with the United States. Well, but the specific content of this additional tariff is a bit vague. Well, here, the Trump administration said that they would calculate a new tariff rate based on the existing trade deficit situation. Well, what does this mean? This means that they would impose more tariffs on countries that make a lot of money through exports, and if the countries don't export much to us, they wouldn't increase the tariffs. They came up with this incredibly unreasonable calculation method. Well, here is a simple explanation of the specific formula. In 2024, the total amount of black trade with the United States is divided into total exports, and then that number is divided by 2 to calculate a 50% discounted tariff. It's written like this. So, what does it mean to divide the total black trade into total exports? How much profit is Nike making from our trade? And this is calculated as a percentage. So, why is this divided by 2? It's because the United States is generously giving a 50% discount. You can understand it in this way. Let me give you an example. Last year, China's exports to the United States totaled $438 billion, resulting in a trade deficit of $295 billion. So, if you divide 295 by 4,380, it's 68%, but originally, you should tax all of this 68% to be fair. But we don't do that, we're being generous. The United States splits the tax rate into 2, so the tax rate is not taxed at 34%. That's what they're saying. But as many of you know, in the case of China, they are already charging a 20% tariff. What does that mean? If you add the existing 20% in reality, China's tariff goes up to 54%. And from April 5th, a basic tariff of 10% will be imposed, and an additional tariff will be imposed from April 9th. A specific schedule has been announced. And separately, a 25% tariff on automobiles has already been in effect since yesterday. As mentioned earlier, in the case of China, a 54% tariff is actually imposed, which is why we have already agreed on a protective measure. Vietnam imposes a 46% tariff, Taiwan 32%, 26%, and Japan at 24%. And also, it is planned to impose a 20% tariff on the imported goods of the European Union, if you see it as a specific tariff imposed by each country. China and the European Union have announced they will take retaliatory measures. Japan has announced that it can consider countermeasures, and France and Korea plan to hold meetings to prepare countermeasures. And there was also one uncertain part. There was a provision that the positive control over the import of iron, aluminum, gold, and copper is lifted. Consequently, yesterday's announcement triggered an ongoing serious risk assessment review, disrupting financial markets. That story led to a crash in risky stocks, and Bitcoin was no exception. On the other hand, the demand for safe assets increased, which continuously raised the price of bonds. Does that mean the return on bonds has decreased? And it led to the rise of N currency, if you look at it this way. Next, I will try to share some of my personal opinions. I think referring to it would be good. Personally, I think this presentation was the worst scenario that exceeds imagination. I would like to evaluate it like this. Especially in the way of calculating the tariff. We calculated a new tariff based on the situation of unlimited deficit in 2024, right? If this happens, other countries will apply the same tariff rate as the tariff rate imposed on the United States. This is a different measure from the existing reciprocal tariff agreement that was revealed. So the talk has changed. In my view, the declaration that they will apply a very friendly 50% discount on the deficit ratio of each country's trade balance, in a word, is an irrational declaration. The economic conditions, currency, and labor costs differ significantly across countries worldwide, which is why. That's why we trade, right? In certain countries, in certain regions, the cost of labor and cost effectiveness are extremely good, making the same goods extremely cheap to produce. In countries like the United States, where labor costs are high, cost effectiveness is declining. Importing was much more beneficial, which is why we had such a large trade deficit and why imports were much higher than exports. They explain this as if it's a situation where the United States is being taken advantage of by other countries, and they will apply the same tariffs here, ultimately imposing tariffs indiscriminately. But I have some doubts whether this is a rational approach. Therefore, I believe this argument is unjustifiable. However, there is a glimmer of hope on the horizon. The basic tax will be imposed from April 5th, and the additional tax is expected to take effect on April 9th. It's not the same date. There is a reason why the dates are different like this. What is the reason? When I see it, I think Trump intentionally set a week's time for negotiations. So if you don't want this to happen, come to me quickly and suggest a solution. You come a little first, it seems to say this. But the problem is that he gave a week's time to solve it like this. But because he made a negotiation method that fits the situation based on such an impossible situation, the conversation and compromise are extremely difficult. That is my personal opinion. So when viewed comprehensively as somewhat pessimistic content was presented, I would like to say this. Right in front of me, I have presented Trump's upper house, which was announced yesterday, and I have conveyed a bit to you what I personally felt. Rather than my opinion, I would like to convey to you what the current experts in the field of monthly rent think about the tariffs announced by Trump yesterday. What is the overall response of Wall Street to Trump's tariffs? I will try to convey the details to you in a little while with the voice of Miziwan Artificial Intelligence. For now, the atmosphere is not very good, so I have prepared a special content. Even in a harsh environment like now, I would like to introduce a secret to maintaining our composure to you all. In a desperate situation like now, we will explore various tips on how to soothe our minds together. Many investors are anxious as the stock market collapses. There are many financial experts who provide advice to alleviate the anxiety of such people without hesitation. You've probably heard the following advice. Hang in there. Now is the opportunity to buy the stocks you like at a discounted price. This is a healthy market correction before it rises again. Just hang in there, focus on your long-term financial plan. It's crazy to check your portfolio every day. Such opinions seem very relevant. But then why, despite all this, our mood doesn't improve, you might ask? The expert is Weldon, a public infrastructure engineer team in Keterkejuval Rajas. He says that saying just hang in there has no effect. Or such a thing could happen. It's not a big deal that the market is falling, he insists, saying that saying so doesn't help either, because from the investor's perspective, this is a big problem. My money suddenly drops 20%, 30%, and this is not a big problem. It's okay. Saying this does not help. He is raising this question now. So the team leader is offering some practical tips that could actually help. First of all, he suggests explaining how much time has passed since the market last reached the current price. I prefer to show customers how long the chart has been climbing to see if the current level was a peak. Well, if that's the case, from the perspective of a long-term investor, it's not so bad. It came back to its position 8 months ago, and it has made much more profit than when it started, so don't think of it as a loss. Well, what is this about? We always focus on the financial loss when the stock price goes down, but don't calculate it financially. Calculate it in terms of time. Let me give you a concrete example in the current situation. In fact, the current stock price is even higher than it was on September 18th, 2024. So what does that mean? It's only been about 6 or 7 months since September. So we've been hovering around for about 6 months, if you look at it this way. If we go back 6 months, we can meet the same level of stock price as now. So if we look at the amount now, it seems like we've seen a lot of damage, but in my case, it's only a few million won. But don't look at it that way, we just turned the clock back 6 months. So as time passes, it can go up more than it did then. Carry this belief and pass on the feeling. It can be understood with such a tip. Team leadership is said to broaden the scope of conversation. Customers who are anxious can settle in portfolio, so he strives to transfer the starting point of customers. The more customers discuss more enjoyable topics, the better they feel. This part is something we can also execute sufficiently. So, when the signs aren't good like this, of course, if we get some investment money now, we should do additional sales. But rather than that, wouldn't it be better to step back a little from the signs and fall a bit? Such advice can make it possible to avoid losses. Now, what's another way to complete our caution about the market? It can be seen as a countermeasure, and it's said to have a surprising effect. It's a very interesting way when you look at it. Rather than focusing on the current loss, it's about considering the possibility of worse news in the future. Well, what is this about? Now, the S&P 500 has dropped about 10%, but imagine this could drop another 20%. So it could drop another 20% in the future, but the current 10% drop might not seem like much. This can be interpreted a bit pessimistically. In this way, pessimism can actually have a healing effect. If we anticipate a drop of about 20%, it would be great if we could recover at about 15%, the mood would significantly improve. So, if we imagine a slightly worse situation and enjoy the current situation, we can probably cope like this. So, public accountant Justin Frederick says, when the situation is not good and the customer is worried, we review their long term plans and anticipate additional hardships. Even if an additional 20% is cut, it is still in a good state. But this part, it seems to apply to those who have an investment period of over 10 years. So, for those who have entered the stock market within the last year, I don't think it will be much help. I would like to add a bit more. And some investors, they use a method to alleviate the customer's fear by using some sort of comparison to familiarize and empathize with the unstable market. Public servant Trent Porter comes out. I really like this expert's comparison. Investing is like climbing a mountain with a yo-yo. You know, this yo-yo going up and down. But imagine climbing a mountain while playing with this yo-yo. If that happens, if we only focus on the yo-yo, we only see the yo-yo going up and down a lot. So in the short term, the yo-yo goes up and down. Here we can now be seriously distressed. However, if you take a step back and look at the bigger picture, the important thing over time is that you're climbing the mountain. The yo-yo is incredibly insignificant compared to that movement. So if we look at the long-term chart, it repeats this up and down. It goes on and on like this. However, the important thing is that you can always see that it was upward when you look at it from a distance. So we need to remember that we are climbing a mountain now, not focusing on the details. It's incredibly useful advice. Another investment expert, advertiser Daniel Marks, comes out comparing investment to driving. Well, when we drive, if the car in front slows down a bit, we also slow down, right? We don't slam on the brakes and swerve the car. We just slow down. And if the car in front starts to speed up again, we also press the accelerator again, right? Investors proceed in the same way. If the market crashes, if the market freezes, we can't stop investing and jump out. If the market suddenly slows down, we just need to apply our brakes and adjust our investment speed to match the market speed. When it speeds up again, we can also run excitedly. That's why we're talking about this now. And finally, there is one phrase that is most strongly recommended to investors who are disappointed, and that is patience pays off. The people around you have a profound influence on the way you perceive the world, which is why it's incredibly important who you surround yourself with. Whether you're listening to financial experts predicting the economy or constantly worrying with friends, it's a conversation. There's nothing more depressing than the fact that portfolio is shrinking. It's about discussing with pessimists and becoming depressed. Even when the market crashes, if you're with people who are positive and maintain a calm demeanor without panic, their influence can be incredibly beneficial to everyone. Seeking out supportive people is crucial, especially during tough times. I cannot emphasize this advice enough. Recently, as I've been reading the comments posted on my blog, I've noticed a significant number of negative comments. And on my blog, there are many incredibly patient investors who have been investing for over 10 years. Many of you live primarily in the United States, and it would be great if you could share your memories or experiences, especially in difficult situations. I personally hope that this will be of great help to novice investors who do not have many years of investment experience. The last content prepared for today is the United States Artificial Intelligence News. We will carefully examine each and every detailed article about the current expert opinions on the Trump tax announced yesterday. This article is extremely detailed, so I will try to get help from an artificial intelligence that mimics my voice. That's all for today's broadcast. I would like to sincerely thank the precious people who have been with me on my important day, the precious readers and members. We will all fight together until the day we retire with our United States stock investments. Have a happy day. Thanks. President Trump's long-awaited tax policy announcement seems to have surprised some people on Wall Street. Even so, it seems to have approached the negative side of the expected results. Exchange-traded funds tracking market indices like the S&P 500 and NASDAQ 100 plummeted outside of trading hours on Wednesday. The stock prices of companies like Nike, which are particularly vulnerable due to tariffs, showed a significantly larger drop. The policy announced by the Trump administration on Wednesday includes a punitive 10% tariff on products imported from all countries and specific higher tariffs on some of the United States' largest trading partners. Next is the reaction to the tariff announcement around Wall Street. Chief Executive Officer and Chief Investor of Alameda, Buck Elliott. With this announcement, the United States has applied the highest tariff rate since the Smoot-Hawley Tariff Act nearly a century ago, and if the surcharge announced is maintained within a certain degree, it could damage the economic growth of the United States. However, most investors predict that the tariffs will be lifted or reversed within a few months, and this could limit the initial panic in the stock market. Adler Hepburn, the global multi-asset question manager of Janus Henderson. Tariffs that are as high as they are on a country-by-country basis should be considered a negative strategy. Consequently, the market will destabilize in the long run. We have seen the Trump administration show a level of indifference that is surprising, given the market turmoil. The important issue now is how indifferent they will be to the actual economic turmoil as the situation progresses. Todd Jablonski, Global Multi-Asset and Chief Information Officer of Prime Asset Management. The United States import tariffs are intensifying the trade war, and there is a risk of exacerbating inflationary pressures. However, the stock performance of Magnificent Seven may already reflect such market influences. If the Fed responds to the economic slowdown by cutting interest rates, the market could experience negative effects. The technical analysis of the Blue Chip Trend report by Larry Tentarelli. The tax announcement came out higher than expected. I believe that the market is currently exposed to more downside risks. I expect more tariffs to be imposed in other countries, and I anticipate a lot of uncertainty. So I think it's good to maintain a defensive posture and hold more than average cash, and I also think it's good to maintain trades in defensive assets like gold. Scott Helfstein, the investment strategist at Global X, says the new tariffs are not as bad as predicted, but they are still significant. The Ministry of Finance has announced a minimum tariff rate of 10%, predicting it will not exceed 20%. Perhaps more significant is that the Ministry of Finance is considering imposing half of the punitive and non-punitive taxes on American products. There are some exemptions for Mexico and Canada, but because S&P 500 companies are making significant profits overseas, this will impact many American businesses. Domestic industries will also take some hit. Based on the tax data reflecting the economic data, it is predicted that market volatility will continue for the next few months. Bill Bailey's management statement on the art market situation. So far, this policy has been reckless, like what this department has done, and the level of complexity added to the new tax is more severe than expected, and it has not yet been reflected in the market. I think this is exactly the situation right now. Nelson Yu, the stock question manager of AllianceBernstein. If we were expecting a clear victory, we see it as a failure to achieve that goal. If we take this announcement at face value, it seems far more aggressive than we anticipated. And again, this will actually have an impact on global growth. Chris Zachary, Northlight Asset Management's top investor. The situation, like riding a roller coaster, continues. The initial announcement was a negative base rate of 10%, but after the details were released, it was much worse than expected. In regions outside of the United Kingdom, 24 to 49% of the market will continue to struggle with the speed of changes in tax regulations and the final results of the tax itself. A hopeful point for investors is that this could be the start of negotiations with other countries, and there is a possibility that the overall tax rate could significantly decrease. However, traders are currently shooting first and asking questions later. According to Dan Ives, a global technology research director at Wedbush, we can define this situation as worse than the worst-case scenario we had feared with these tariff lists. Tech stocks are under great pressure due to concerns about tariffs, especially on products from China and Taiwan. There is concern about the impact on price and margin and what this might mean for the global supply chain in the future, particularly for companies like Nvidia and other chip manufacturers that have significant exposure to supply chains in China and Taiwan. He added, Wall Street was not optimistic about what they heard, as the market for CFRA Research's leading investor, Sean Stovall, did not anticipate such a volatile situation. What they are worried about is not just an increase in volatility, but a transition to inflation and earnings per share growth. I think the market will probably go down, continue to go down tomorrow, definitely test the 1% threshold again, and probably put us in a deeper correction. People wanted clarity, but the ambiguity has increased due to yesterday's announcement. Thank you.